Okay, so Manappuram Finance just dropped their Q3 FY24-25 results. Looks like you've got a lot to unpack here.
Yeah, it's quite a bit. Let's start with a quick overview. Manappuram Finance, as we know, is primarily in the gold loan business, but they also have subsidiaries in microfinance, home finance, insurance broking, and even IT support, right?
Exactly. And any big strategic shifts or anything to keep in mind before we dive into the numbers?
Well, they've been dealing with an embezzlement issue at their IT subsidiary, Macom, but it seems contained. Also, Asirvad Microfinance had some business restrictions lifted recently. Other than that, it's mostly steady as she goes.
Gotcha. So let's hit the income statement first. How did they do overall?
Okay, so their consolidated revenue from operations for the quarter ended December 31st, 2024, was 2,559.72 crore rupees. That's compared to 2,305.28 crore rupees for the same quarter last year. So revenue is definitely up.
Okay, good growth there. What about the bottom line? Net income, the important stuff.
Net profit attributable to the owners of the parent company is 282.06 crore rupees for this quarter versus 572.87 crore rupees last year. It looks like profits are actually down quite a bit.
That's a bit concerning. What's driving that decrease?
Well, the elephant in the room seems to be the microfinance segment. Asirvad Microfinance had a technical write-off of 399.66 crore rupees, which really hit their credit costs and profitability. Also, keep in mind, a disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Ouch, that's rough. So essentially, some of their loans in that segment went sour, right?
Exactly. I mean, they mention climatic disruptions, issues with their lending model, and over-indebtedness as contributing factors, as sounds like they're working to improve their recovery efforts.
All right. Did they declare any dividends this quarter? That's always the key point for investors.
Yes, they did. The board declared an interim dividend of Rupee 1 per equity share with a face value of Rupees 2. The record date to determine eligibility is February 21st, 2025, and the payment will be on or before March 14th, 2025.
Okay, February 21st, record date, and March 14th, payment date. Important dates to remember, right? For all the dividend folks out there.
Absolutely. Now, let's flip over to the balance sheet. Anything jump out at you there?
And looking, well, segment assets are up for gold loans but down for microfinance. Is that right?
That is correct. Gold loan assets are at 39,869.43 crore rupees, while microfinance assets stand at 11,279.03 crore rupees. This shift could reflect their challenges in the microfinance sector that we just discussed.
Right, makes sense. Any red flags in terms of solvency or liquidity?
Well, they've maintained the required asset cover for their secured non-convertible debentures, which is good. The auditors, Chokshi and Chokshi LLP, have also certified this.
Okay, that's reassuring. Let's move on to cash flow. Are they generating enough to cover their operations and those dividends?
I don't have the explicit cash flow statement in front of me here, but given the dividend declaration and the overall profitability, it seems they are managing, though the microfinance issues could put a strain on things if they persist.
Got it. And what about that global medium-term note program they approved? What's that all about?
Yes. They're looking to raise up to USD 2 billion through foreign currency bonds. It's a way to diversify their funding sources and tap into international capital markets.
Okay, so potentially cheaper funding or at least more diverse funding options? Smart move.
Exactly. But it's also subject to market conditions and regulatory approvals, so it's not a done deal just yet.
Fair enough. So let's talk ratios. Debt to equity, profitability, the usual suspects.
Their debt to equity ratio is around 2.33. Their net profit margin, calculated as net profit after tax over total income, is 25.18% for the quarter.
And how do these compare to their historical averages or industry benchmarks?
Well, without digging into specific historical data, I can say that the net profit margin is down compared to previous periods due to the microfinance issues. The stage 3 loan assets to gross loan assets, which is a measure of their non-performing assets, stands at 2.46%.
Okay, higher non-performing assets eating into the profits, right? So overall, what are the big trends you're seeing here?
Well, the gold loan business remains solid, but the microfinance segment is definitely a drag on performance right now. They're also actively diversifying their funding through that GMTN program.
All right. What's your outlook on Manappuram for the next few quarters? What are the potential upsides and downsides?
I think a lot hinges on how quickly they can turn around their microfinance operations. The lifting of the RBI restrictions on Asirvad is a positive sign. Also keep an eye on that GMTN program.
Yeah, if they can get that funding at favorable rates, that could be a significant boost. What about the dividend? Do you think it's sustainable?
The fact that they declared another interim dividend suggests they are confident in their cash flow. But again, the microfinance recovery is key. Investors should also note the February 21st record date and the payment date on or before March 14th.
So, bottom line, what's your final assessment here? Should people be running for the hills, or is this a buying opportunity?
Kam, I wouldn't say run for the hills. The gold loan business is still strong, and they're taking steps to address the issues in microfinance. It could be a buying opportunity for investors with a higher risk tolerance and a longer term horizon.
Okay, a bit of a mixed bag, but potential for recovery if they can execute. Well, I guess that about covers it. Any last thoughts before we wrap up?
Just a reminder that the dividend record date is February 21st and the payment date is on or before March 14th. So those looking for near-term returns, keep those dates in mind.
Got it. Dividend investors, mark your calendars. Thanks for breaking all of this down for us.
No problem. And hey, if you're enjoying our content, don't forget to like, share, and subscribe to the channel.